Hello and happy Halloween, bull runners. If you're watching this even weeks or months into the future, that is totally fine. This is going to be one of the most valuable videos you watch on this channel. Many people have been wondering, is this bull market cycle over? And maybe as you watch this into the future, you'll see how in hindsight, a video like this can still help you navigate the next bull market cycle or even potentially the next bear market as it arrives. Now, that said, everyone's been reaching out on the channel asking, is the bull market over? Especially with consistently seeing all the cryptos that they've been buying down. And when you actually take a look at all cryptos that are altcoins that are not in the top 10 by market cap versus Bitcoin, going all the way back to January of 2022, they are currently down 76%. In other words, holding any altcoin that is not in the top 10 by market cap versus Bitcoin would have lost you 76% of gains, which is absolutely insane. And in order to make that 76% back, you would need to choose an altcoin that gains at least 320% against Bitcoin, which is extremely difficult to do considering in a bull market cycle, Bitcoin is going to continue trending up. But everyone's been worried, is Bitcoin still in a bull market cycle? And I aim to answer that question and help you learn the skill to recognize for yourself, which is why I'm uploading my last live call on Technical Analysis Tuesday. And you'd be able to find that if you click on the live recordings over at altcoinpro.com, go to Technical Analysis Tuesdays, and then click on the latest call. Matter of fact, all of our prior calls are going to be uploaded. And by the way, they are uploaded as replays for our students the day that we record them. So there is an ongoing library of all of these calls that show you how to understand a chart, how to understand indicators, what the most important things are, and even ask your questions live, which many of our students do. Now, this call is going to be extremely valuable because you're going to learn how to identify bottoms through volume and expansion and contraction, how to confirm an uptrend, what it means that we are seeing a broadening top this market cycle, and yes, we are late stage. So you're going to want to pay attention very closely to this video. And by the end of the video, I will give you my personal answer on whether or not this bull market cycle is over. So stick around till the end and let's dive into it. Welcome to the Tuesday technical analysis call. It is the 28th of October, 2025. Market's been really just interesting. And this is kind of, in my opinion, not like I'm not bearish yet, but you do need to play a little more cautious, considering just looking at how this trend has rallied so hard for quite a while now. Important to note, right? Bottom came in right here, November of 2022. And if you were to look at the gains and the percentage gains off of, let's say, the lows here to the first range highs here, 100%. Okay. Let's go from this low. Usually that first to second, potentially, you could argue the third leg up in an Elliott wave theory analysis. Not going to cover that right now, but usually the third wave is the longest and the strongest. And so this move right here, the second wave, if you will, technically third, if you're really doing, textbook 1, 2, 3, you could even say 3 came into this range, but it's a little tricky. So the point is, I don't use Elliott wave often. It's rare that I do. I might use it on shorter term time frames. You can try to do super cycle analysis, all that stuff. I have the books on it, and I'm like, this is complicated. Not only is it complicated, some of these theories, they just add more confusion, right? You're going to make a million points. This is the small subwave of a wave. And so the way I look at it is this: I keep it very straightforward, very simple. Okay. The beginning of a move, the market's still kind of skittish. Like, for example, the bottom, let's think about the psychology. The bottom down here, right? Nobody knows if this trend is officially done moving to the downside, right? And one could argue you might potentially know when we break above this range right here, right? What you find even more interesting, we've talked about this and covered it last week, is the fact that, like, we saw a bit of resistance right here at the prior range high. So is it possible, right, that we break back down right at this range here and make a new lower low for a double top? Yes. Was it possible that this could have double topped and continued to the downside? Yes. But generally speaking, right, and this is why we have to practice good risk management, markets are relatively skittish. So they don't rally extremely hard off of bottoms. One surefire way, in my opinion, to maybe not surefire, but one way to really know whether or not the market's kind of bottomed out more often than not is just looking at volume. Notice this capitulation volume. Look at how big the volume is on this dump. And you'll notice that it's actually quite big relative to the majority of the range back here. Okay, this is what you call capitulation. It could be leverage, in the system. Just in this case, it was bad news surrounding FTX and the collapse with, SBF. But then look at what occurs after, right? Look at how weak volume becomes. It's below average and declining. See, this blue line is just declining, declining, declining below average. And then we get really tight in this range. And last week we covered how um, when you get really tight in these ranges and the bars are looking very tiny relative to how they used to look, right? What we're looking for is an expansion of volume. Now, in the case of a bear market, expansion of volume to the downside. In the case of a bull market, expansion of volume to the upside, which simply means this, right? Decline in volume. And again, you're going to have to train your eye to see this because it's not always very straightforward. And you will get, a few spikes here and there. Someone, if they don't know what they're looking at, they'll be like, well, look, you goes boom, up and then down and then up and then down. And in many ways, I could say it's similar to Elliott wave theory, right? It's like you have your wave one, wave two, wave three, wave four, small subwaves. But I don't really, again, I don't always complicate it when I think that way because yes, you could look at these small ones. What I'm more so focused on is the overall, right? Expansion on major dump, which in this case was like capitulation. And we know this because the price dumped hard to an actual bottom and then decline in volume. Overall, yes, you have a few days up, you have a few days down. Generally speaking, you'll see that this thing is just declining, 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 declining. Then we get really tight right here. And usually when you see very below average volume close to a bottom like this, okay, where the price action candlesticks are also very tight, then you see an expansion for a move to the upside, something we covered last week, right above this range high, like this. Okay, that's a good indicator. Notice this right here. Before we even continue on forward, look, expansion of buy volume, 1, 2, 3, 4, 5, 6, 7 straight days, because we're on a daily time frame. So many of you guys, if you're newer, let's say this is your first time on a call, technical analysis, totally fine. These are fundamentals that I'm not covering because I'm assuming you already know how to look at different time frames. If you don't, right, just do technical analysis essentials in the back end. But like if I'm on a 3-day time frame, right, each one of these bars represents a 3 days of time, and that it would include each one of these candlesticks. So recently, one of the students that I was on a call with had a question around, well, what does it mean like when you look at this, right? They're like, is it green? Why is it green? Well, it's literally this. It's just because the bar was green. Now, it doesn't mean in this case, right? This was $199 million of buy volume on Bitcoin for this 3-day candle when it closed here. Does this mean that this was all $200 million of buying? No, it means it was just total volume, right? So there was buying and selling that occurred on this 3-day time frame, which caused that local high before dumping to the next range low right here. So this right here is just the aggregate or the total volume traded in that day, or excuse me, in this case, this 3-day period. To make this candle, which means there were simply less sellers than there were buyers. That's all that means. More buyers typically pushes the price up, right? Less supply, more demand, price up. More supply, less demand, right? Price down. And that's what occurs. And that's how these markets actually operate. Pretty straightforward. Yes, there's things when it comes to liquidity and, but again, we don't want to get lost in the weeds. I want to focus on just the price action and just the trend. So at this moment in time, we know our local high is here on a 3-day time frame. And look at what occurred. Again, look at the tightening of the range in volume, even on the 3-day time frame. Then what happens? Expansion of volume. But the expansion actually happens for a new range high. So this right here is your first indicator alongside the volume that maybe the bottom's actually in. How else do we determine and know this? Simple, right? Trend, right? So if the trend is your friend, where's the actual low of the entire range? Here. You could even say here, right? With those candle closes. It doesn't really matter what low you really want to use. What matters is, are we now putting in higher lows? Like I don't want another major wick down here. even though we close up here, that's a little sketchy. It's indicative of the fact that there is far more selling than I would like to see. That's it. And that's enough to tell you that if the price is going to break down this hard, maybe there aren't as many buyers here. And so what occurred is the wick comes all the way down here, right? Maybe people get, wrecked right here for sure because their stop losses are there. But it also indicates that there just wasn't enough buyers here or bids or orders to actually take all of that supply. And so the price dumps hard because maybe there's still leverage in the system and creates a long wick. And so if we came all the way down to 14.8, I'd be a little bit more weary buying into a range like this. But that's because what? We have a new range low. So those are the times I will pay attention to wicks. But in this case, we see what? One large wick, two large wicks, three large wicks. Notice I just changed the time frame. I'm doing the same analysis. If I go to the daily time frame, it's the same thing. It's just those wicks might be different. And arguably on one of the days, right, you had some closes into these ranges. See the difference? It's all you're just adding three of these candles and it's telling you where that wick is. So that said, we have some pretty nice strong wicks down here. And so when in doubt, zoom out. If you're like, I'm struggling to see something here, maybe zoom out to the 3-day time frame or the weekly time frame. And that's a very easy way to know where the trend is at. Okay. In this case, the trend was down. And again, last week I covered that, so I don't want to spend time on it. And I'm just focusing on these wicks. Look at this wick right here. Low. Now, what do we have on the next wick? Smaller candle, right? Right here. Wick is above the prior wick. Then we start to get a tightening in the price action. Do you see that? And even this really nice green candle here, although it is not a bullish engulfing candle, it's a small candle, no wick to the upside. Notice how we have lower highs consistently on the price action. We still get a major range low. So this low basically comes and wipes out the prior low here, which means maybe the thing's not done moving to the downside. So this candle is nice to see because I'm seeing a long, strong wick here. I'm seeing a lot of buying now on this close here. Oops, let me get that line there. Do you see that? Notice support, 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 support. Here, support. First breakout day. Okay. Now, again, the reason it took more time than you would have liked, sometimes people jump the gun, they buy in right here. And it's because, again, the market's skittish. They don't know if the trend is over, right? So you're going to get less powerful moves, even though it's early, right? And yes, the most money you'll ever make is buying the bottom. That's a given, but it's impossible to know it's the bottom. Nobody knows where the bottom is. That's the reality. Not even the guy putting $100 million behind a smaller token. Again, if they're doing it in a very illiquid token and they become that market, they're going to experience way too much slippage in their orders. And what that means is they lose money buying in and out. Like there's no one to buy the product from them. So they need very liquid markets. So if someone, has a lot of money and they're like, oh, but that person knows where the bottom is because they bought it. No, they're also getting lucky. It has to come down to the fact that like the market's liquid enough, which means there are other big traders that you're playing against. And it is a zero sum game in that sense. And at the end of the day, can they keep selling when I buy? The answer is yes. So it's like a dual-edged sword. There is no perfect solution. Nobody actually knows where the bottom is. I can create a bottom in a very small token in an illiquid market. The problem is I'm screwing myself. I lose money on all those trades because when I buy, it pumps the price too high and I order somewhere in the middle. And guess what? Some small player just made a ton of money because they were already in. They start selling and maybe everyone else wants to too. Maybe the big market maker, the order book looks at it and says, oh, this is a great time for us to get out of our position or play against that trade. So there is no way to actually make a top or a bottom where you don't get wrecked, which means big players rely on liquid markets. Okay. And we saw how illiquid the crypto market is just a few weeks ago on the 10th. That even an XRP with almost $200 billion in market cap can up 50% on virtually all exchanges. That's insane. So big players, big institutional guys do not like that. They don't want to see that. Can they create it? Sure. But honestly, I don't think it's smart. And I know they don't think that. And that's why they like bigger liquid markets. So they want to wait for more people to enter the space or the other institution to enter before they do. And the spot ETFs will help a lot, by the way, because when buying happens through a spot ETF more often than not, right? It's done at an institutional scalar level for clients who are probably stronger holders than a lot of crypto investors. So more and more, it's kind of like a 401k. A lot of people might treat it like that. Go to their fund manager and say, "Hey, I just want to buy XRP. Can we allocate like, 1%, 0.5%?" And those guys will just always buy that product, and then they rip it off of an exchange because it has to be actually be custodied as a spot ETF. So that's where things become better for markets, where you actually have a lot of demand over time and it's just consistently being bought. That's why the stock market does pretty well over time, right? Everyone's adding to the S&P 500. When you have enough players doing that, it's very liquid. So, explaining liquidity, again, don't want to get too lost in the weeds there. Nobody knows that this is the bottom. And so the point I'm trying to make is markets are relatively skittish. So how do you know where bottoms come in? I like to say when I start to see a directional change in the trend, one, two, I see a new higher low. Three, I see, well, not three, but the trend continues. I see a higher high and I see an extreme, like, what's the word I'm looking for? Contraction in the actual volume. The volume contracts. It's tight, tight, tight. And then into a new move to the upside, it expands. And that's what we saw right here on a 3-day time frame. We actually saw quite a bit of follow through, right? And broke for a new range high. Where was our prior range high? Here and here. This guy, a little sketchy to buy into. You don't know it could break back down and go for a new low. Here, you'd have more confidence because now it's like where was the actual range high on a larger time frame? Right here at 21,000. Not only did we break above, we were supported here, saw a bit of volatility, 3-day time frame, break back out, large spike in volume, right, with a massive bullish engulfing candle. If you really wanted to wait for confirmation, 25K was it. And that's what I covered last week. Now notice, right, into that bottom, if we're really covering the bottom here, to the range highs, where, you could say the candle closes here for a double top. You could say the wicks, doesn't matter, 100%, okay? Now, people are far more confident in this range here as we're building out. Here, let's remove those drawings. We know 100% was there. Building out a long, strong range of support and resistance into this breakout. Notice again, expansion, right? As we are trending in this range, and look how tight the candles get here. We're holding above some key levels, the prior range highs. Do you see that? Look, resistance, support. It's very straightforward sometimes, and not always. Right now, I would argue is one of the hardest markets you can trade. It really is. With that broadening top, that's crazy. But look at this contraction. And this is, by the way, in bear markets, you make more money in a bear market if you play it well, not necessarily shorting, but using it as a time to, really hone your skills and find, bottoms and start to accumulate at the right times. Like here, you're making some money if you invested at any point in time here, right? Like now you're adding to risk because we're so much higher in the price. And then the trend has been there for 2-3 years. But look at this break right here. Again, not as big as the volume back here. This is a good indicator. It doesn't always need to be bigger. Usually you do see expansions, right? But right here, I'll put a line. Break above for what? New range high. Higher high to the prior highs, right? And look at this. Into that, what do we see? Even from the lows right here. Contraction. And then look at the buy volume, right? These green days. Expansion, 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 right? Sometimes doubling and tripling. And that's what you want to see into a breakout. So this is a sign of a very healthy trend. Now, why expansion and contractions? Pretty straightforward. And by the way, the psychology of this is now there are far more players who are confident that we are officially moving to the upside. So now you're going to start to get bigger moves because more players are entering. And as more players enter, volume is literally just an indicator that shows you how much money is actually flowing in. Is there a lot of volume or a lot of that shares of that product being bought? Because by the way, small players can't buy a lot of shares. Big players, institutions can. So we want to see an expansion of volume because that is an indicator that bigger money is entering. Bigger money can support trends. You and I likely can't. So that's why volume is so important. Now we move to the upside, actually quite strong, right? And just continue rallying. And notice again, look at all this expansion, including a really big sell day. Do you see that? Some people might freak out there and say, uh-oh, we're done. Sometimes these big sell days into actual bull trends are really good accumulation opportunities, even if we saw a bit of follow through like we did right here back to the downside. okay? Which is where you can maybe apply, like, let's just add an EMA. You look up EMA, moving average exponential. Now, super quick, if you're enjoying this video so far and you want access to calls like this where you can be in them live while they happen, then go ahead and check out altcoinpro.com. You can find the link in the description or the bio below. You'll see a page that looks like this, or you can join nearly one of our 1,000 members worldwide. Many of them are in the United States, but we have a lot in Europe, all through the Asias, and even in Africa. And every single week, we host plenty of live calls, sometimes twice daily, in order to help educate you so you can reach your crypto goals this market cycle. Even if we hit a bear market, there are so many ways to profit from crypto, whether it's airdrops, putting your crypto to work and earning DeFi yields, or even shorting the market. It doesn't really matter. Crypto is always an opportunity the same way the TradFi market is an opportunity. And so whether you're looking to actually be educated about the space or simply take advantage of altcoin picks, for example, one of our members, Herman, took a play from one of our DeFi pros, and he said he finally jumped on the virtuals train yesterday with a small amount and made a very nice profit, considering he missed the liftoff. In other words, he didn't even get in at the right exact time, but he still made enough to pay for a couple years of his APU membership. Another one of our members closed a trade from our altcoin pick sheet, something that we update consistently. And thanks to that pick, they're already massively up 83% on their hype play and 90% on their jupe play. So not only do we offer courses and classes, we offer live calls, altcoin picks, technical analysis, airdrops, everything you need to become a crypto pro, or in just 15 minutes once per week, put your crypto to work for you, which really comes out to about less than 8 hours, or about 8 hours per year, to not only pay for the membership, but to potentially even become a crypto millionaire. And obviously we can't guarantee you any one result. You do have to put in the effort and have enough working capital, but virtually all of our members stick around for so long because they make more money with this membership than they actually put into it. So go ahead and check out Altcoin Pro, and if in 14 days you don't see any results in anything, or this just isn't for you, go ahead and ask for a refund. It's no worries. Now let's get back into the video. Okay. And then right here, you just click on inputs on the settings and then type in 20 and just see, does it align with anything on the chart? Okay. And sometimes it does, sometimes it doesn't, right? Sometimes it trades through the price. So if 20 doesn't work, you know what you do? Okay, well, maybe 34 does. Why 34? It's like a, you know, some people like that number from a fib level. Other people like it because, like, I've seen, you know, it's not 30, but it's just above a month. Like, there's a million reasons. You don't need to. Honestly, what's funny is this is completely, that's one I've used for years, and random for me. Like, I genuinely think I saw it on a video years ago, and I was like, I'm gonna just put it on a chart and see how it looks on most charts, on what time frames, and it works often. Like, that's it. I'm not kidding. This is 34 3-day periods, so it's like 100 days. Okay, this is essentially the same as a 100-day moving average on the daily time frame. If I pull up a 100-day, here, let's just do it right now so you guys can see, right? It's going to be slightly off, obviously, because technically 34 times what, we're like 103. But if I do this, let's do moving average exponential again. I'll change the color, settings, style. Let's just do yellow. Okay, and we'll do this to 100. And then what I'm going to do is turn it on the daily time frame. So watch. It's going to be very similar. Do you see that? They're on top of each other. And that's because 3 days times 34. So this is really just a 100-day moving average. Okay, but I'm on a 3-day time frame. It seems to like being supported there pretty well, right? And when it doesn't and it breaks down, maybe just chill out for a little while. But look, supported really well here, rallied hard to a new high, dumped back down to the 100 EMA, 34 in this chart, and then went back up to the prior range highs, failed to break for a new high. Notice 0 wicks to the upside. Look at this. Not once, but twice. Look at how high we went here relative to these highs. So the market's now struggling to break for new highs. So not only were we supported, could it have gone up further? Answer, of course. But it didn't. And so now you have to practice caution. Where would I like to maybe, you know, take some profit, get out? I mean, at the end of the day, from the bottom right here, when you really look at it, right, in these lows, let's look at that. So we had our low here, 100%. Our next range lows from these highs. Okay, let's delete that and delete this just to get it out of the way. Let's see, almost double that, 200%. Okay. Again, this is just confidence. By the way, when you get 100% here and then another 200% here, it's going to be more difficult because of the sheer mass and size of that market as it grows and expands. That's what makes price go up, more money in it. It's going to be harder to push up. Okay. So that said, let me delete that. Now let's look from these lows. You could say, okay, the bottom right here, or right, if I want to catch as much of the wicks as I can, I'd probably go from there and call it good. Another 100%. These are some really big moves in a really big market. Okay. Now, when you get three of those, one, two, three, I'm telling you, you're going to start to see a contraction even in the expansions. Okay. So again, very cyclical. In this case, notice that now from this low to our new high before waiting forever for it to break out, 70%. One day we might get in the near future 30 to 40% off of what? Maybe this low at 100. Let's just go from there. And the thing is, because 100 is really low on Kraken and on other exchanges with 105, 104, I'll go from that wick. Okay. So this is why it helps to maybe have multiple charts. Okay. Look right here. Kraken, 100K on that wick. Let's really dive in there. Look, 100K on the wick. Okay. 3-day, daily, doesn't matter. Why? Hourly. Look, wick. Okay. I'm on an hourly time frame now. Because that's how fast. And by the way, that happened literally in not even an hour. I think it happened like 10 minutes. So that said, just going back to the daily, okay, strong long wick to the downside, 100K. Look at the difference. By the way, Bitcoin is such a big market, but even exchanges like Kraken were illiquid on that day because on, let's say, a Binance, it dumped to 102. That's a $2,000 difference. That's actually quite like 2% on a market of this size is crazy. On let's see here, Coinbase, 103.5. Why are they all so different? Right? Liquidity. That's it. How much money do they have on that exchange? What's in the order books? Um, so that's where it pays to maybe like have multiple charts of some of the bigger guys at least. Yeah, I don't look at a million charts for every crypto because then it's like, it's a lot. I usually like in this case, I have this crypto market sector, watch list and I'll have like layer one blockchains and we'll just click through them, right? I first added like 15 Zetas at one point in time. Okay. And then I found that this chart in particular, HTX, had the most liquidity, right? And the longest price action chart. In other words, this thing went further back in time than anything else, which gives me a good look in a whole picture into this market. Does that mean that I am only buying Zeta or trading it on HTX? I don't even have an account with them. Okay. I just then go and trade it on Kraken. But at least on a Kraken, they might have listed it over here, which caused this pump, and you don't know. And you're thinking, oh, this thing is bottoming out. Or, and in reality, it's like, look at this terrible trend. This is a terrible product. This thing is going to die. Like it's on life support. So, I'll click through. Okay, XMR on Kraken, XLM, Coinbase, Wemix on Gate.io, right? So the list goes on. Let's go over to, and I'll show you guys an example of, let's get back to the other chart here, just because we were on it to begin with. So now I know, okay, realistically, yeah, what 103 was probably like the low on most exchanges, maybe 102. So again, I'm just trying to be, as realistic as possible, not overdo it, not underdo it, not use one piece of data in order to make my decision, but a few. And then just say, okay, well, if we were to pump, you notice that we're getting contractions. We did get 200% expansions. Now we're getting 100. We're really late stage in the market. I mean, this has been years. Okay, this is a later stage market now. Can't deny it. We got a nasty, what some people like to call a Christmas tree, all right? But this one's on fire. And in this Christmas tree right here is extreme volatility in a broadening top type pattern where you're getting a series of higher highs and also lower lows at the same time. This is a nasty trend to trade, and very, often it can be prone to failure. Now, the reason I'm still not fully bearish is because we are holding up very well, okay, at least for now. At this range resistance, what used to be a resistance becomes a support. And you can see that not once, but twice we were supported here with a long wick and a lot of buying. Same here. So as long as we remain above 107, I'm still bullish because the trend is still up. We still have what? A series of, from a macro or, a bigger outlook, right? Low, high, low. Is this low higher than these lows? Answer yes. Is this high higher than these highs? Yes. So technically, textbook wise, we are still in an uptrend. It's just this broadening top is not what you typically like to see, which is why we should be a bit more cautious. And then, we'll add a little bit of a layer to that. But I also don't love, and this is where I was telling people on a video not long ago, right? Notice that right here, there's kind of like you can break this trend into a few different things, not trend, but this range here. Okay, so let's remove all this stuff. And by the way, noting that this was 100%, this was a 70% move. Okay, let's just say and this is where you can actually create a realistic target, knowing where the stage of the trend, okay, and knowing that over time, as markets become bigger, they become harder to move. You need new market participants to enter, and I'm not saying they're not. I'm saying that the odds and the likelihood of it growing another 200%, right? Because you'll hear targets like that. Someone's over here pitching, oh, this thing has to hit 260. Well, we saw 100% on the last move, 70% here. I'm willing to bet it's going to contract, which means I'm going to be more realistic and say maybe a target comes in at, I don't know, on the high end, 60%, on the lower end, potentially even 40%. Why can't it pump to just under $150,000? Again, nobody actually knows. So like write everyone off and just use this to help you make a decision. And by the way, taking profits starting at 147 isn't bad, because if it starts to break down, and I'm not saying you should, not financial advice, uh, if it starts to break down, you're going to be happy. But if it continues riding, not only do you secure a bit of that bag, right? You can just take profits along the way up until a top. So I don't see a reason why you wouldn't want to, you know? Um, That said, let's remove those drawings and now just focus in on this range here. And notice, like, by the way, you can do this with literally anything. The reason I'm doing Bitcoin right now is because not only is it the largest, it's going to carry the market, but I think it's a really good example of like, okay, now that I have this perspective and outlook using Bitcoin, I can now determine what to do with other cryptos, right? Because the whole crypto market's going to follow. It's not even like, it's not something I need to prove anymore. It's just they're highly correlated, okay? Some are less correlated, some are more correlated. You're going to have the one black sheep in the family. Like they're all in the same family. It's mostly the same genetics. Some are, built better, sure, but I guess what I'm trying to say is like they're all when the market dumps hard, they're all dumping. Okay, so now we have this range here where let's just look. I would argue that is our actual top range, top of the range, 123. Okay. Now, if I want to double verify that, well, we've seen a lot of illiquidity and some things. Maybe go from Kraken, knowing it's 123.3. Okay. Let's go over here. Let's look at Binance. And I'll put the line in the same spot. Now, why am I putting it there? Okay. I'm trying to touch as many points as possible. Notice right here, candle closes, bull trap, right? With an actual, the first day we had a breakdown. Look at breakout for the one day breakout, truly. Right here. Like I would hardly call this a breakout, although technically new high. Again, if you really want to be cautious, wait for the close. Okay, close. Third day, look at this. Break right back into the range. This is more often than not a bear trap. You would have had time, by the way, to look at it, considering ready. Okay, new lower high yet again. Failing to break for those highs. This should have seen a little bit of follow through or a move like this up to 130, hang out for a bit, maybe come back down, retest. This is textbook bull trap. Massive, right? Liquidation event and unpredictable, truly. It wasn't just a Trump tweet. It could have been, but notice this. This is what's weird about the market and why I stopped caring about news as much. Anything could have happened in the world to make this happen. Okay. Could have been a Trump tweet. It could have been, a bomb was dropped somewhere. It could have been, tidal waves hitting the West Coast. Like, who knows? This is luck for people that are shorting, but the market was giving you a signal before that. This right here, break right. Like if we don't move fast and hard after this much time going back to July, maybe the market is a little bit weaker there than it should be. So whenever I see these on a breakout, I will buy it. By the way, notice the volume's like not really like exploding up here. It's kind of just chilling. It's still an expansion. I would buy it, by the way. It's just maybe a little bit more caution. knowing what the volume is doing. Then the first day it breaks out, it breaks right back down below the range high of 123.3 again. So yes, on most exchanges, that's an indicator. You know what? Worst case scenario, watch. The next day we see follow through. Boom. Get back in. Like, who cares? It's okay to be wrong, small, and hopefully right big, which means get back in if it gets, pumps right back up to 125. In this case, what do? You stay out until it's back above the range. And it didn't. It failed to twice before the event. Someone says, oh, but an insider knew, and that's why they suppressed the price. No, like, it's weird how the market works. Sometimes, like, the beehive truly just gets things before an event happens. I don't know what it is. And it's something I'll never know. And nor do I, what I found is I don't need a reason to know. I just look at the chart. And if I play it right, over time, I make good money. Now, where's our range bottoms? I'd probably argue right around there. It also helps that this is, look, going all the way back to our range resistance. So we did have quite a weird little situation here, right? With a flag or a pennant, but this is our range support now, with some really long wicks. And guess what? A bear trap really quickly right after. So this type of volatility, broadening top, not fun to see, very difficult to trade. And this is where it's like it pays to have good risk management in place. You don't need to be right throughout this entire range. And it sucks. It's boring. Imagine waiting July and you're like, oh, I'm still down. Or I'm still, if you bought in the midline, 113, you're currently like break even. That's a long time, right? But you would have saved yourself if you're buying up here, you're not selling, not practicing good risk management. There's just a lot of ways you can lose money. There's very few ways in markets you can make money. There's a million ways you can lose them. So right here we have our now range. I would say somewhere in our midline is like right here. It's kind of tough to say. Sometimes it helps to pull up a VRVP and say, okay, where's a lot of volume traded? At the end of the day, it's kind of everywhere here, which means there's a lot of interest in these prices between 107 up to 120 on Bitcoin. Okay, if I zoom further out, you're obviously going to get less volume here than you probably did back down here, just because it's actually looking at the total shares of Bitcoin traded. In other words, it was cheaper to trade shares of Bitcoin at 96 than it is at 112. Just cost more. That's why when I really zoom out, and this chart doesn't even go back that far, notice how big these guys are here, because at $19,000, okay, you could have bought a lot more Bitcoin. This is going based on shares. This is going based on my volume tools using dollars, but its volume's the same. So volume would be using shares of Bitcoin. Let's go to the daily and come into this. So right here, you can see that we do have, and I'm looking at the range on a VRVP. A lot of interest in these ranges. So if it spends more time here, I'm fine, but I don't want to be adding to risk. And I actually mentioned that again in the video. It's like it's already made its move to this range where now it needs to break above 117. And if it's already here and you haven't like been in since the lows here, maybe just give it some time, right? Wait a little. Does it come back down to retest 107? If you really, if you're like got a lot of courage and you're okay taking a bit of a loss, like adding to a position there or entering there is not bad. I personally don't love doing that because this is an indicator that there's more weakness. And you could be right. It could be the bottom and then finally it explodes to the upside, which is why sometimes it's nice to catch those. The problem is this is riskier than buying up here. It's just riskier because this is a confirmation of strength, right? It's like if I lived in the ancient world, right? And I'm going to buy a few oxen. Am I going to go buy the old one that's already been overworked in most of its life and like, but it's experienced? Or am I going to go buy the younger one that's stronger, got muscle, and maybe I can train a little? It's like, it's obvious. The answer was obvious. And I could breed that one. Like the answer is buy the stronger bull or ox, right? And so in this case, like buying strength is always safer. Doesn't mean you're getting the best price, but you don't need to. Because if you catch some of these moves for 100%, 70%, on some 30%, sometimes quickly, and you're only losing a few percent at a time, you make money. So right here, right, we're seeing resistance. We're seeing a new local, high, just barely. Let's remove those drawings. Notice this little wick comes just above the range, but immediately sold off. So we know where our resistance of the range is. And I'm okay with that as long as Bitcoin can either hold above 107 essentially, 107, or just continue trending to the downside just slightly, put in a new higher low, and then come back into this range. If it came back up here, I'd be more privy to buy, you know? And it could be a week, it could be a month. Like you don't know. Nobody does. So that would be fair. And that is possible. And then, what's even funnier is already, what do you see here? Right? Not only a support, but look, inverse head and shoulders. Shoulder one, shoulder two, right? Local bottom, so head. So it's like this. Breakout, right? 100% move to the upside. Like stuff like this can happen. I'm not saying it will. I don't know. Uh, but I am prepared for all those scenarios. So that said, let's go ahead and basically what I'm saying is right now we're somewhere in the middle. There is no, like today we saw some other markets sell off. Ethereum is right back down, underperforming Bitcoin just by a bit right now, right? Consistently holding above, right? This range resistance, which is now kind of a support, even with all this volatility through that range, going back in time, right? Pretty consistently, like long period of time from 2024 back to 2021. This seems to be a decent support, but notice what is this? What are we seeing right now on an Ethereum even, right? So by the way, as bullish as I was over here, I'm less so now. Like it doesn't pay to be. It doesn't mean that it can't be supported and break for $10,000 this year. It just means that look, high, high, and double top really, right? Low, interesting. So now we have range low before the high, two lower highs, a lower low, next low, next range high potentially. If it breaks back down here, it's going to really struggle then to get back up. So this is something now where you practice more caution. You don't add to risk just because it's a dip, right? Um, and it sucks. No one wants to say it's like everyone wants to be bullish, you know? Like nobody likes the dude who shorts the market. But I don't make the rules. I'm not like, I didn't make the market. I'm just trying to play it and play it right. XRP is going to really struggle if it's notice the difference. So look, all-time high. Where are we at? XRP is pretty far off of it, and I'm not saying it's like bad, but I'm just letting you know. Look, we're 28% down from the high. Let's look at Ethereum. And again, why? Sheer mass. It's also a smaller market, 19%. So if you look at Bitcoin off of its high, let's look. Start to notice that this is pretty consistent across the board, by the way, 10%. Relative strength wise, Ethereum did not pump. I don't think it did. No, it didn't pump for a new all-time high here. Bitcoin did. Strength wise, Bitcoin is stronger right now. Okay. On the dumps, it dumped less. And it's holding above a range, what? A longer term range support right there. Here and here. So very easy to confirm. Which means, okay, it's above range support. Where is XRP relative to its range support? Same period of time, right? With a little bit more action. If I could get the line tool to ever grab. Below. So it's going to now have to face all of this overhead resistance. And so if I'm buying strength, this is not strong, relatively speaking. I'd rather buy less risk and Bitcoin in an environment where we're seeing a broadening top, which I'll show you in a second, versus something that's relatively weaker. Same chart pattern, really. And notice that it broke for a range high, right? We're not seeing like a strong breakdown here, by the way. Kind of just chilling. But if Bitcoin does start to break down, what do you think is going to happen to this guy? Right? It's already relatively weak, which means if I were to take a short, I would short XRP before Bitcoin. Now an Ethereum, right? Looking at this thing, similar. Notice how it didn't break for a range high, but it's holding up relatively well and still kind of above this range support. Even though it's in a technical downtrend, we've got a lot of support going back. Like this whole range between 4,000 down to 38 is not a bad place to like say, okay, if I want to be a dip buyer. I personally don't want to, but that's the point. It's not below the range having to face all of this overhead resistance. It's still hanging in the range. It's not trending up. It's trending down. I don't want to add to risk. But like, so in other words, in order of magnitude, I would be first to buy Bitcoin, then at Ethereum, then XRP, not using anything fundamentally, literally using the chart. Um, that said, you could look at a million other cryptos and most are getting trashed. Now, one that I find really interesting is this one right here, XMR. Let's remove this guy. And I'm not telling you to buy it. I'm just showing you what I see. Notice how like when okay, XMR pumped for a high in May, okay, to 420. And since this point in time, it's just been chilling below, 350. You see that? It's almost like I just drew that. You're gonna train your eye when you do this enough. But now everyone sees it. They're like, oh, look, yeah, range resistance. What I find lovely about this product is it seems that everyone who is going to sell has probably already sold. There's so few sellers or leverage in this particular product. How do we know? Everything dumped extremely hard for some insane lows in on October 10th. Look at what this guy did. Our range low for it to break down below would have been 235. And by the way, I'm not an XMR guy. Like I don't care about the privacy layer and how old it is and the news and the all the stuff you see. Like it might be great. And apparently right now the market doesn't dislike it. Notice that on October 10th it was chilling at 345 and it only broke down to 265 and since then is right back up to 340. That's strong. And so strong in fact that the dump was very weak and it couldn't even break below a range low. So this is indicative of strength. If you zoom out, what's even cooler about this chart, look at this huge cup, huge handle. You could even argue this is a new cup and this is a little handle, but the pattern itself is what's so beautiful, right? If I just on a weekly time frame, look at the strength on the last week. Look at where if we break above here, do you think it's going to 420? Easy. Not even a question. And for me, you take a trade on that, that's a quick 20%. Now it comes down to your timing. Okay. Timing matters because it can hang out here for a few weeks and you get chopped up in between, especially if you're using leverage, right? You're paying fees on that. That's where it's like you have to, timing matters. But I'm going to say this is really looks good relative to the rest. So as long as Bitcoin can hold up, XMR is probably going to pump at least 20% minimum. Now, it's also important to note it's a slower mover over time, right? It's taken a long time to get back up to these range highs. Some are at new all-time highs, newer cryptos. I also like the fact that we do have a lot of time. And by the way, if we break above 420, guess where we're going? Likely 517. So let's say it does pump there. What do you stand to make? 33%. Have a game plan for yourself, right? By the way, if it breaks above 517, and it might not the first week, 2 weeks, month, 2 months, 5 months, I don't know. Look at this pattern. Beautiful. Third time touching the all-time high, new higher lows, and just so much time to break. And by the way, these types of patterns are very, very bullish long term. We're talking going back to 2018. So whenever I get a chart like this, very similar, not exactly the same, it never is, but look at this. Anyone know what happened to gold recently? Even with the volatility dumping back down to 39 from 43. Look at this. You could argue here to here, right? Gold just needed a bit more time and probably the right macro underlying things going on worldwide. But look, 2011, huge cup handle, and it's kind of not textbook. Again, I don't care if it needs to be perfect. Look at the pattern. Look at what it's showing you. Then the breakout, and everyone's talking about gold. Gold would have told you right here. Right here. I'm ready to go. You don't need, what's funny is then all of the fundamentals align. The whole globe is behind it. Oh, look at, governments. It's like, bro, the chart told you before. Like, so that's what's so weird and interesting. I don't know. It's like what came first, the chicken or the egg? I don't know. I don't care. Not a question that's worth asking. The real question is, how am I going to handle it and manage it? And in this case, right, we pumped really hard. Very similar, just less time. Very similar though on that XMR. So just a heads up, relatively, it's strong. And there's plenty of cryptos you might find along the way that look good. By the way, the longer the time frame, right? Typically, the stronger and the longer or more sustained the trend to the upside is going to be. If it's a very short term pattern and it did all this and now it's ready to break out, just understand it could also be prone to break down pretty quickly. Okay. So I like seeing those longer ones because those are the opportunities that when you take them, again, look at this, right? Just from a time perspective, when it did start to move, it's been doing this for 600 days, been pumping. Someone sold at day 300 pissed off that they sold. But this is how many? 2011 to the breakout in 2024. 13 years of time. Don't expect it to break down so easy. It's kind of like I pull on that bow and arrow slowly, 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 slowly. You're like, okay, it's ready to pull. It's ready to stop. Just keep pulling, 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 pulling. Years, 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 years. Oh, it's ready to go further. You're like, okay, how hard is that thing gonna fly? It's gonna shatter the freaking arrow. You know what I mean? And so that type of a thought process is gonna help you to not take profits too soon on something like an XMR. And on some of those could be your biggest winners that set you up for life because you only need to do that two, three times in a row, right? But think about the time that passes in between. Life happens, right? Things come up. You spend your money, you lose it on a stupid trade, right? So again, there's a million ways to lose your money and very few to make it. Um, okay, let's answer a few questions because it's almost 3 here. And I think I'm going to have to go pick up my dog soon. Does anyone have any other questions or um, oh, and I did want to show you this. So let's while you guys type it up. Peter Brandt did post this. I shared it. I think it's really important to look at. I'm kind of the opinion that we're having an exhaustion gap. I think someone else posted something that's really, important to note or look at. But we'll look at the Nasdaq. So Bitcoin and crypto are kind of struggling to break for new highs right now. Doesn't mean that they can't. They're lagging. I like the support that we're seeing above 107. It's fine. From the market perspective, looking at the Nasdaq, which is interesting, we had some exhaustion gaps to the upside. Or wouldn't call it an exhaustion gap yet, but I've seen these patterns before. And I will state that even on a Tesla, right, or like an Nvidia did really well, but on a Tesla, when you started seeing this type of price action, sometimes it continued trending hard, but like taking profit into these ranges is not a bad idea. And so, especially on these, because it's likely eventually these are going to get filled. Filled meaning this gap, people call them fair value gap. I'm not too sure exactly what that would mean. I'd have to look at the terminology, the technical terminology again, and what exactly it means. But I'll put it this way: this gap can be filled. And again, looking at the Nasdaq, look how long we've been trending to the upside, right? Even going back to April of this year, but longer than that. Real bottom of the bear market again, November 20, bottom with crypto. So this is an extension. And I, how often do we see that? Look, when we broke here, right? Look at these little pumps right here. And notice how we really didn't close this gap, right? So, but the later you get later stage in the market and you really start to see the market fly like this, this is where he's asking the question, is this actually a breakaway or an exhaustion? I'm of the opinion it could be an exhaustion, which is why you want to practice caution. We're not seeing the same moves in crypto. It could be lagging. This person said, I find it as an exhaustion gap. Noteworthy that oscillators, RSI, and stock look overbought. And that is something that I was like, wait a minute, I don't look at those often. Let me look. So you go ahead and look, right? And even from a weekly perspective, if I pull up the RSI, and let's pull that down and just look at Bitcoin, okay? This trend, weekly, all-time high on the RSI. Notice this? Here. High on the RSI. Where's the next high for Bitcoin? You could argue here, right? Double top, so we'll just do the first one. Hit the line tool. Here. Where's the next one? Here. Okay. Now, between all of these ranges, what are we seeing? Higher highs on the price. Now, this is important to note. It is. Doesn't need to be perfect. Notice I'm just drawing a line. Doesn't need to hit all the, oh, look, it needs to touch the top of it. No, just, are we seeing the line go up? Yes. Higher highs. RSI doesn't need to be perfect, but look, are we seeing lower lows, including into this one? Yes. This period of time, going all the way back to March of last year, okay, is enough time that this is something that's important to pay attention to now. So if we do get an exhaustion pump, something goes boom, 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 you're like, whoa, where did that come out of? That is going to be an indicator. Maybe it's time to start getting out. Um, and maybe, just maybe this cycle too, we see the pi cycle top indicator pop off. Like, oh, there's the top. If it does, that's going to be crazy. I'd be shocked. But yeah, so there's that to note. And looks like, okay, just from a macro perspective, CPI, so inflation actually came in lower than expected. We were expecting 3.1%. It came in at 3. I think that's another major reason the markets are rallying really hard. Because like that's a great indicator. Like we thought it was going to be worse, and it's not. And because everyone knows that the Fed has been flying blind on certain key points of data, here tomorrow they're expected to lower interest rates another 25 basis points. And that is relatively bullish for the market. So, not an indicator, again, of a healthy market, just an indicator that things are going to be cheaper to borrow. And just buying into that news makes sense. So, that's why I think the market's rallying pretty hard into this expectation. Now, if they keep it flat, watch the NASDAQ in the stock market closely, watch how Bitcoin responds, and then make your decisions with everything else from there. Um, I think, yeah, that's how I'm playing it right now, and just making a mental note of this, that there's less money to be made on the table now at this stage of the market. Um, so, does anyone have any questions? Are we good to go? Let's see here. I'll read through a few things, but smaller crowd today, so kind of nice. Uh, Jose, I don't know when you asked at 244, but I don't know what I was referring to. Would be better
Yeah,
to the upside.
yeah. I'm sorry, there's missing a little bit of information, but when you go back to we were talking about the Bitcoin at the daily chart, and you were explaining that the possibility, right, that if it goes, let's say, to 107, 108, right, it should look healthier if it goes uptrend, right, instead
Yeah.
of going down, because going down, it starts to look like it's doing sideways, and now we're back to the bottom again
Yeah, it's like
instead
this.
of
It's like you're buying a limping dog. Like it's limping. It can't even break for a new high, you know? And
Mhm.
like a high is an indicator of strength. And even if it's a local high, I now like where do we see a resistance? If we're really zooming in, let's go to that 30 minute. Okay. Where do you see resistance on the 30 minute? Pretty straightforward, right? Here. So we know now between these two highs where the bottom is, right? Realistically, like I'm gonna not focus on that wick because major liquidation event, focusing on where the actual bottom came in from a close perspective here. Okay. So now I want to see this trend maintained and potentially even if it came right back to 108, okay, some level of support where we have a new lower high. Hopefully, it trends back to the upside and breaks above for a new higher high. This would be an indicator that the trend is ready to go. But if it starts coming back down and you're buying, 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 that also could just break down further. So I don't like to buy a limping dog, especially in a bull market, because there's other things you could buy. You're wasting your money and then potentially your time as well. How long until it breaks back to the upside? This is why an XRP is a little bit more risky right now. Ripple, the company, is making really great moves and using their money to acquire companies that are very profitable. But notice what it's doing with the price of XRP, which means XRP is not as closely tied into that entire all of their business as we would like. Because if it was and it was being used constantly and being bought constantly, the price would look better. That's just what happens to all charts and all markets. Like that's just realistic. Um, it's not wishful thinking. That's just the truth of markets. So yeah, I tend to stay away from at this point because we're here once, twice, three times, four times, fifth time touching. It's sketchier. The more it touches, the more you knock on a door, the more likely it's going to open eventually. So it's
Right.
the same with supports and resistances. The more you hit that top level, the more likely you're going to break out. But with the bottom, breakdown. So, in all fairness, because we're in a bull market, I'd still not be privy to short sell here. I could be right and I make a ton of money. But like the odds are, right, it's going to continue trending to the upside. I still want to watch it, what happens here over the next couple of days, because we are seeing resistance. In other words, timing of your entries is one of the most important things. Um, which, learning technical analysis hopefully helps. So does that answer your question? I would like to trend it to the upside before I'm buying on this one. Yeah.
Yep. Yep. Yep.
Okay. Um,
Thank you.
yeah, no problem, man. What do you think about DCA? Dollar cost averaging is great, especially through a bear market. Like, we'll know when the bear market is in because the chart will tell us, right? You'll get this trend to the downside, and imagine you add a little here, little here, little here, little here, little, and your average is somewhere in the middle at 34. Into a bull market right now, you're very happy. But that's more of an investment strategy, right? Dollar cost averaging is an investment strategy. I don't do that when I'm playing moves like this. So, by the way, investing into a bull market on a dollar cost average is great. In other words, if you're investing 10 years out, dollar cost average all the time. That's what Michael Saylor's doing with his Bitcoin position. He's anytime he's got extra capital, he wants to buy more Bitcoin because he believes that Bitcoin's going to be at least $1 million, right? And so if that's his thesis and theory, that's an investment strategy. Dollar cost averaging isn't something that I would do for little things like this. Okay. So that's also something that maybe will differentiate. Uh, IP story have any hope? I don't know what you mean. IP story have any hope? Can you just rephrase that question? IP story? Okay. I was like, I don't know what you're referring to. I don't know, man. I've never seen it. Maybe I have. Have they talked about it inside the back end? Like at Altcoin Pro? Oh, so the actual, okay, ticker's IP story. I'll look at it. If it's a relatively sizable market cap, circulating is about a third of the supply. Decent profile score. I don't know how much I trust these things. I'm not saying it's wrong, and maybe they use a different, couple of factors to or variables to that they look at, but um, it's important to note CoinMarketCap is owned by Binance. And so if any company they're competitive with or against is in the space, they can give it a lower profile score and they'll have their reasons. And so I wouldn't focus mostly on this. I'd probably, even with this, right? I'd probably mostly focus on the price first, then look at all of these other fundamental factors. Because you could have a circulating supply of 10% of the total supply, which means there's going to be a lot more supply entering at some point in time, which is a lot of overhead resistance, and they need to find a market to sell it to, right? To keep the price flat, not even up. And so, but what I love about those liquid markets is because they're so illiquid and maybe a lot of that liquidity or those tokens are on one or two exchanges, those market makers can really pump the price hard. And so I've made a lot of money on ones that have like in the past very low circulating supply, even though it's like, dang, like this thing's gonna get wrecked someday. Like that's something that you can think about too. So this isn't bad. It's not great. But then we'll look at, the tokens. So here's what I'll do. Let's do IP USD. Cool. It's on Coinbase. I like to see that. So it seems better than, most tokens. If it's on a Coinbase or Kraken more often than not, that's a pretty good sign that it's like a legitimate company. Okay, then I'll just add it over here on the USDT. It's not listed on Binance, which is interesting, which means maybe Binance they didn't want to list it, they didn't pay. But like if they're listed on a Coinbase, I think they're big enough that Binance would have loved to have that liquidity, but there might be a conflict of interest in their business models or what Binance is trying to do with a competitive thing, which means Binance won't list it. I won't give you liquidity. Does that make sense? Like I don't want your liquidity. I don't want you guys to succeed and get more of a market and more money in, and then people can withdraw their IP, right, from Binance. So I don't need to make a market for that. That's what that tells me. Let's come here and now just click through. Okay. All of these. Notice they're all pretty much the same ones at $5. Okay. A lot of the times, if you're like, uh-oh, like what? I don't know why it does this sometimes. I save it all the time. Notice that I have this change and change percentage. I don't want change there. So what you can do is just go volume, remove change. And now you'll have the volume and the percentage change. And I like that a lot more. And then what I'm going to focus on is which of these tokens on IP or just IP, which exchange has the most liquidity. Okay. How many shares are being traded? And you can see that here, this one on OKX has 1.3 million, whereas this one on, it looks like also OKX, but just the USD pair only has 228. So I'm just going to delete that one no matter what. That's too small. And I'm focusing on this one right here. And let's just see how much data we have going back on that daily. This thing was listed on February 13th. Okay, good to know. So I'll just click through. Looks like around the same time, February 13th, 15th. So now clicking through all the charts, notice this one was listed a little bit later, March, okay, on Kraken. So, and 60K volume versus the rest. So I'll just delete that. And then I'll click through. And you know what? If most of them were listed around the same time, guess which one I'm using? Yeah, all about the same. They could have came, one started at 34 cents. This one started at 150. Notice they're like a little bit different. I'm not looking at the one. Listing days are weird on most exchanges. So I don't care about Qcoin having a low right here. This listing into these ranges right here is where the real bottom is. Okay. Like right around here. So listing days don't pay attention to as much. Unless you have a stupid, crazy long wick to the upside, and even then, it's fine most of the time. I'm focused on where did it end up on that day. Okay. And so in this case, knowing what we know, it looks like this is a pretty good chart. Notice right here, we're at a dollar. The other one was at 34. I don't care. Very similar. $1.90 broke back down to $1.50. Similar, but way more volume. So that's the one I'll use. And then let's just look at it, right? Some had a longer wick, some had a less of a wick, right? Again, liquidity, blah, blah, blah. We've covered this. I'm just going to focus and I'm going to not look too much at the wick right now, although it is kind of important to note. Where did we close? Resistance, false breakout, resistance, support. So strong trend to the downside. Over time, trend is up. Okay. Right now, we're down. If I'm buying this thing at all, I personally would like to see it bottom out, maybe hang out for a while, and then start trending back up versus adding to risk here because it looks like there's a lot of selling here, right? I mean, this thing is off those highs, and I'm not saying it's going to break down forever. I don't know, but 67%, that's a lot. And who says it can't come right back down here to 280? So you're buying here and it continues breaking down. This is where sometimes now it matters to look at this stuff and what are the token unlocks, and this is like, now I'm getting into the weeds a little. This is a technical analysis call, right? But like I used to do this 24/7 with tokens and I realized I don't want to waste my time with it anymore. It's a lot of work. um, and I just focus on mostly price, and I found that works pretty well. But if I'm like, I really like this token, I really want to know, should I be adding to a position? Sometimes it pays to come over to, uh, sometimes they'll actually have their like token unlock schedule, um, and you can see that like, okay, this is right here, right? How many tokens are in circulation? Cool. Plan distribution 5%. But then you can find on their website, or there are other websites that'll show you, um, and by the way, it looks like it's its own blockchain, I guess I'm finding out. Um, it'll tell you like when the token unlocks are going to happen. And so that's very helpful because then it's like, oh, into a low right here, another 30 million are going to enter the market. Guess what that means? Likely selling. Because the people that got in early invested before it even listed. Okay. Like that's what these seed rounds and A and B rounds are. And so they're buying the token before it's ever listed, before it's even real. And then they get allocated those tokens and they release through the blockchain at certain points in time. And it's usually programmatic, right? If it's not, that's really sketchy. But then what happens is this team, let's say they bought in at under a dollar and the price is still $5, bro. They're up 500%. And they couldn't sell here. Maybe they did in the open market, but on their first initial TGE, they call it. But at the end of the day, they're still massively up. So their whole purpose is to make money. They're going to sell the token if they don't think this is the next Amazon or Apple. Okay. And that in most cryptos aren't. So this isn't something I like seeing. I don't like seeing this strong sell pressure from 15 down to here. I do like that we're seeing a trend to the upside. But this right here, if we got a low of 340, that's still technically, or even just back up to down to 4, that's still technically an uptrend with a new higher low. So Why would I buy that though? Again, buying weakness versus ready comes down to here and then starts to put in a new trend. Oh, interesting. Buying in here is far smarter versus buying dips like this. Okay, so I hope that helps. I mean, it sounds cool. I would look into it. Maybe I'll do more homework into the actual like fundamentals. But the chart is telling me to wait. Is there another time? What's best practice when planning risk to reward when doing a perp? If there's time, sorry, I saw another first. I've been stopped out due to a type stop loss. Okay. Um, that's tricky, Jose. I think with perps, you just need to know that like you can blow your account if you're and that's fine. This is why I literally keep 10% of any max of any of the money that I own in crypto on an exchange where they offer leverage, like, or in that levered account, like a futures, perp futures, because it's easy to get wrecked. And the reality is, it's just easy to use those sliders to go to 2x to 5x to 10x. And 10x is just really, it's insane. Like 10x, I teach people that when you enter for the first time on a crypto, pilot buys like 15 to 20% max of your entire portfolio in that. So it's like imagine you have 100K. I enter with 15, which means you're actually entering with a 0.15 of leverage of your account. That's not fun because you don't see, oh, I have like 14 Bitcoin in this trade. It's like, no, that's the point. They're the ones making money when they offer leverage. Just want you to know that. And so it's great to have a tight stop loss. The way that I like to look at perpetual futures is like it's like any skill in life. You have to practice it enough. And then over time, you get to know how that market is. And you can actually trade really well and make money with that and still keep tight stops. But the answer is not as simple as I would like to make it right now. So it's like, knowing what you're doing here, right? If you're like, for example, knowing what I know and I just shared here about this crypto in particular, do you really think I'm going to add a long position right here and then still keep a tight stop? No, because it's instead I would wait to see what happens here and then I would still have a tight stop, but I notice the trend changes. And so then it's like, okay, here I'll enter on a little breakout, watch the volume, still tight stop. Stop below the breakout day or breakout candle, however fast you're trading. And so that is fall. And notice, by the way, you and I are both taking longs. I just waited for the right time. It's because I learned how to look at a chart. So I hope that helps a little, man. It's a little tough. It's tough with perps, bro. Leverage is not easy, but I will say you should never be putting on a 2x right away. If you can't make money with literal spot, you're not going to make money with futures and leverage. So just to have,
Yeah, I've been practicing,
okay.
with a small bag, as you mentioned, like just keep my playing bag for it and try to practice where is the trend, where is that support and resistance, and then make a decision whether okay, I think it won't go here, let's say 1 to 4, 1 to 3, depending to at least make some, a couple of bucks.
Yeah, for sure. And that's actually really good because then it teaches you like, a few of those losses or blown accounts too is actually very healthy for anyone. It's like what's nice is when you do blow an account and it like doesn't actually hurt you because like you didn't put all of your money in it. You know what I mean?
Yep.
Like that's nice.
Yep.
It's fine. So good for you, man. Um, okay. Any final questions before we hop off? I think yeah, they haven't reached out yet, so I'm hoping everything's good. But I think I'm gonna get rolling here in a sec. I'll take one last question if you guys have it, and if not, no worries. I think we're good. Okay. Thanks so much, guys. I appreciate your time. Hope y'all learned something today. Keep practicing, keep looking at charts, keep pulling up different charts of the same crypto and see if you can't learn how to do that properly, right? Make sure that you have like change percentage and volume on there, and you just do that by clicking on this little three dots, getting rid of change, because it's the same thing, really, just it's the number. This is more important, right? What percentage is it up or down? And then volume. So, uh, I will talk to you guys this next week, and next week it'll be the same time. So should be. I haven't changed anything. Nothing's in the schedule. So I will see you guys then. Thanks so much.